So we get this idea of the differences. When we look at a market, we obviously understand the concept of the matrix is not one-dimensional. It's two-dimensional. So if you only understand this dimension here, and this dimension is, of course, price. This axis running up and down your charts is, of course, your price axis, and everything seems to revolve around this price axis. But for institutions, that's not relevant. Why is it not relevant? Well, because price is an advertisement. That's all price is an advertisement. It doesn't represent anything at this stage, does it? Price is actually almost irrelevant as an advertisement. If I said something to you guys, it's $100, would you want to buy it? Would you want to buy it, guys? $100. You'd say, well, what is it? I'm not just going to give you $100. What is it? What the hell are you talking about? What am I getting for my money? Exactly. So in other words, the price is $100, and until you know what the hell you're getting for your $100, you're going to look at it and say, I don't have a bloody clue what you're asking me to do here. So no thanks. I'm not going to buy it for $100. It may be a caramel. You know what I mean? It may be a chocolate eclair. Bloody expensive chocolate eclair, right? But you can obviously understand, therefore, that the idea of price itself is almost meaningless unless you've got an ability to say, well, what is it I'm buying, and what do I think price is going to do in the future, and do I need it? Do I want it? Well, the only reason why you ever need or want any product is because you want to flip it, correct? I mean, I'm not assuming any of you are buying oil because you want to get 1,000 barrels of oil delivered. I don't think any of you want to buy treasuries because you want to get $1 million worth of treasuries delivered, and so on, right? I'm not expecting you to take physical delivery of whatever product it is you're trading in the futures. So there's no value in you buying or selling these things except to flip them. And therefore, the only reason that you'd ever want to flip these is because you believe that they are underpriced or overpriced against value. So in other words, you're now looking at price from a value perspective. That's brilliant. What a great start. So value is a third dimension here, isn't it? Value becomes another dimension that we have on another axis. We have this value axis over here, for example, and we say, well, we've got a value axis as well. But, we still have a problem here. That's okay for you guys. That's okay for you guys to say, I want to get a 5 lot. It's okay for you guys that want to get a 1 lot or a 2 lot. You can get a 1 lot or a 2 lot or a 5 lot anywhere you like to get those trades. There's very few markets that will not be able to accommodate a 5 lot trade without giving you an easy price, an easy way in. But imagine you're sitting on an institutional desk for a second and you want to get 1,000 oil contracts on. Imagine you want to get 10,000 ZNs on. Imagine you want to get 500 YMs on, 500 NASDAQ on. Now the value in the price is relevant, but the volume is the most relevant. Well, volume's relevant to everybody. Everybody in the retail space knows about volume. But what we know about volume is very, very determined by the time of the day. I mean, anybody that says, when can I get 5,000 ZNs or 10,000 ZNs? Everybody knows the answer. 1 o'clock onwards, between 1 o'clock and 2:30 London time. So we start getting this idea. When am I going to be able to get a 50 lot traded on gold? Top of the hour, bottom of the hour. So we start recognizing that the time aspect is also incredibly important through this process. And we have this time aspect that crisscrosses, because obviously the price goes from left to right and the value goes from left to right on that scale, and from bottom to top And then we get this crisscrossing of these value lines, don't we? As time passes, these two lines move. And obviously what happens is we intersect with certain interesting elements where we actually have a combination of volumes starting to hit the screens as well. And this is what the challenge is for a lot of retail traders, because they don't know this stuff, or they've been misled about this stuff through these things like trading clocks and various codes in the marketplace that this is how it always plays out. And it's not true. It's not how it always plays out. But we'll certainly be touching on these elements as we go through today's classroom at 4 o'clock. But the idea here is there's going to be key pieces of information available to us at these areas. And it could happen here. 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 And there's a lot of places that it could happen. But we would be looking specifically, not that this is a sell and this is a buy, it's got nothing to do with that. I'm just highlighting them so that they're separated. So I'm going to be looking for these as opportunities. It could equally happen here, for example, just so that everybody's 100% clear. And we start looking at that as a process. And we did a classroom this morning showing this with oil. And I don't know if anybody had any surprising revelations when I showed it on oil this morning. But we then called a live trade out on bonds. We called a live trade out on bonds. And the live trade was this trade here. So we then did the live trade so that we could show you what we called out live in the room. We did in the right-hand side on NinjaTrader to show you the trade. And then the outcome was, well, it was relatively fantastic, if you ask me. So this is what we're going to be focusing on, is this crisscrossing aspect of time. And, you know, the idea of time, price, opportunity in terms of the profile guys should not be lost on anybody. One of the words that they use is time. Time, price, opportunities. Time and price, value gives us that volume. Time and price with value gives us the volume that we know what it's going to be used for. And that gives us our edge. That gives us our big dogs lean against edge, doesn't it? If we don't get that, we're simply running around the charts from bottom to top, trying to find a deal somewhere random, local random locations, trying to find a little bit of an access. And we simply don't know where it's going to happen. The point is, does it always happen? And that's where a lot of people go wrong with this, because a lot of people say, well, it's got to be this and it's got to be that because of this and that. And the answer is no, it doesn't have to happen. There's no reason why it has to happen in any of these locations. But if it's going to happen, is what I'm saying, you now have a better idea where it's going to happen and when it's going to happen. So when we go back to this idea of the trade log, the timing and the location is now starting to show up. And this is the final aspect that we needed to touch on for this concept to be tradable, this idea to be tradable. And that's where we take ourselves into today in Classroom, and that's where we focus on this week in Classroom, is this ability to now time our proper areas, look around those areas, and that gives us a chance to get a break as well, believe it or not. That gives us a chance to chill down a little bit. We can switch off for a little bit of time, knowing that the execution guys are simply not up to much, and therefore we can get a little bit of a break. We can walk away, we can come back in 5 or 10 minutes. So we're going to be doing a lot of work on this today, and we'll be developing out this idea for the rest of this week. So welcome in, guys. Hope you're all geared, ready to rock and roll, ready to do some business. And I'm looking forward to this afternoon. I think it might be quite an interesting afternoon. I mean, it's a quiet afternoon in terms of data, which means that we may get the opportunity to do a better rotation, which would be nice. Always make more money in a rotational market than any of these trending markets, that's for sure. So we're going to be interested to see how this afternoon develops. It's a normal week this week, no US holidays. I'm surprised I haven't heard Kim mentioning the Cowboys yet today. I wonder. But certainly all my laddies did a good job. We had Baker, we had Trevor, and we had the Dolphins all doing a bit of business yesterday. So it was a very, very pleasant evening for a change, as far as, you know, usually that you're holding your head in shame, aren't you? But not this time. Not this time. We had a good weekend. So welcome, guys. Get started shortly for the afternoon session. We're just watching this oil coming into 2 o'clock. Next up, NYMEX